The ECB is widely expected to keep rates on hold at its meeting on Thursday in a bid to leave almost all policy unchanged. There are likely to be a few tweaks in the language, but no overall alterations. However, the meeting will see the release of new staff projections for growth and inflation. Growth forecasts could well remain unchanged, but inflation may be revised higher on the back of CPI and commodity price strength. Joining me to discuss the outlook for the ECB and commodities as well is Serge Berger from thesteadytrader.com. Serge, great to see you. We've got lots to talk about today, from gold to oil and some individual stocks in the auto sector I know you wanted to touch on as well. But first of all, let's just kick off with the ECB. Is there a trading opportunity tomorrow? What should we be expecting?
Hey, Victoria. I think, the ECB has been for some time now something that you don't really expect much to come out of. But I think at this point, considering where we are, reopening the economies, vaccinations going much better in Europe now. I think for the first time in quite some time, it'll be the ECB has a chance to maybe really let inflation do its thing and kind of maybe get to somewhere near their targets that we're trying to shoot for. So I'm not sure that this week is all that important, to be honest with you. I think it's more as better data comes out throughout the remainder of the spring and then into the summer or through the summer. Let's see how the ECB, how the rhetoric changes. I did bring along a chart of the 10-year German bond yield, which got close to not quite the zero bound, but it's a big move from being down negative 90 basis points in the throes of the pandemic last year. So I think the trajectory definitely is higher, and I would expect, all else being equal, and I know the Fed and the ECB don't have the same exact mandates, but I would expect them to do whatever they can to let inflation and growth run as much as they can.
Yeah, so on the subject of inflation, part of that has, of course, been driven by this massive rally we've seen across the commodities complex, not least with oil. We've seen WTI this week break above $70 a barrel, pushing to highs not seen since 2018. There were some analysts saying that we might see some near-term consolidation, some volatility after last March, but it doesn't really appear to be the case. It just continues to march on higher.
It does, and we actually came out officially with our sort of intermediate term upside target on oil, and it doesn't matter whether you take WTI or Brent for that matter, of $80. So it's another nice move from here, but I think it's not unreasonable. It was just the other day in the news that the 100 strike calls in 2022. I forgot what the month was. So next year is actually the most actively traded call option on oil. So I'm not quite sure we have that much upside. Of course, I'll be happily surprised, but $80 it remains quite interesting. More than anything, though, I think what's interesting here for a lot of individual investors is how to trade this with single name stocks within this space.
Yeah, so what are some of those individual stocks that you've been looking at that are interesting when it comes to playing your market story?
Yeah. I mean, you can look at some of the big ones, like, brought along just a couple of them. You could look at something like an obvious one, like an Exxon Mobil, and brought along some optics here. You can look at PSX, Phillips 66. Honestly, you can look at almost any of them. Schlumberger, and they're not all doing the same business, but they're all in sort of oil and related businesses. I'll give you the sort of Schlumberger SLB is a ticker symbol there. So, what I think is really interesting about the energy market on the equity side is that it's been an unloved sector for at least a decade, and that's because it's been one heck of a bear trend. And so there's very few hedge funds that are focusing on energy anymore. A lot of them folded over the past number of years. And also, historically speaking, the energy sector tends to be closer to a 7, 8, 9% weighting of in the S&P 500 versus right now it's like 3%. So if this were to come back alive, and I think it really has a good chance of that it will, then sooner rather than later, and we're talking institutional investors that are doing this right now, they're going to start really rebalancing their portfolios and allocating a lot more to energy. And I think that's really where the upside is in the equity side. So it's not necessarily a just right now a trade, although we're bullish energy equities really through time. But I would even look at this as a multi-year trend that's really, really interesting.
Yeah, so while we're on the subject of equities, I know you've been taking a look at the auto sector as well. What are some of the names that are catching your attention?
Well, what's really interesting is if you obviously one of the big ones that everyone's been focusing on is Tesla, and Tesla really essentially topped in January when we got our proprietary sell signal. It's been losing money for most investors since, in sort of from a price appreciation perspective. But we've seen a lot of money running into the Volkswagen of the world, Ford, GM, and of course those are all old, traditional automakers, and that's because a lot of these companies have really made a big push, or at least announced a big push into the EV space. So I would, we're actually on in something right now in General Motors, and full disclosure. We think some of these, and these are really momentum trades for right now, but something like General Motors and again a Ford as well, Volkswagen in Germany, I think they're all names that do make sense. And it's not to say they're taking away business from Tesla, but I think Tesla's been a name that's been working so long that from a pure trading perspective, these algorithms seem to have changed into these names now, which makes sense.
Yeah, well, that provides me with a nice sort of segue to get us back into the commodities conversation, which is by taking a look at silver, because obviously that's a metal that's likely to enjoy some of the benefits of the electrification trend, automation, the green revolution. And not only that, but also it's got that safe haven status as well. How do you feel about silver right now?
Yeah, you're right. It's a bit of a potpourri of multiple sort of tailwinds.
Mm.
That's for sure. I always say that silver is one of the more difficult things to time in the very near term, along with oil and quite frankly a bunch of commodities. But there is something to be said about the safe haven aspect and sort of combined with the industrial thing. Um, and so we do think silver has a lot higher to go over time. The question is, when is it really going to go? We've been long silver in full disclosure since essentially, the middle part of last year, and we remain very bullish. It's just, silver tends to make big moves and then consolidate for longer than most people can stand, and then it makes another big move. So I don't honestly have a timing on it, but I do think, well above 30, mid 30s through uh, a 6-12 month lens would not be that surprising at all, which in percentage terms is a big move even for silver.
So, is your view on silver in particular, or does it sort of spread across to the precious metals complex as well? Because it's been interesting to see the price action in gold lately. We know that it's had this sort of 2 month bull run. Now it's been consolidating a little bit. Do you think we can continue to push higher and potentially push back above $1,900?
I think they're not the same from a sort of trend following perspective. If the algorithms are all going in the same direction, I would imagine you could have some positive correlation there, but it's not the same. I think with gold too. I mean, I have very little doubt that we can see 2100, 2200 through the next 12 months or so, maybe 18 months. Um, but again, gold doesn't really have that industrial part of it. So I think what we probably have to see is something changing the macroeconomic picture. Maybe we need to see growth start to decelerate and inflation continue to run hotter. That would be kind of a scenario in which gold would probably really come to shine. And you can see it, as you point, we've already seen quite a big move, which, by the way, technically is an absolute beauty. And so, really 2100, 2200 through a 12-month lens shouldn't be that difficult to get to. Uh, I think what we have seen though is we've seen some of the money, and this is, I can speak to this empirically. We've seen, some people that are traditional would have put money purely in gold, did diversify into Bitcoin. So that probably took, some of the steam out of it. But so I still expect very bullish moves, but I would probably here too have a longer time frame rather than a shorter one to be bullish gold.
So, do you see Bitcoin and gold as potential substitutes in that way?
Not exact substitutes, but I think there's correlations in an environment where you're going to see, a continuation of money printing, which we've seen. Of course, it's nothing new. Um, the only thing the major difference for me at this point really is the volatility. And I think, we've seen some people probably get a bit surprised by Bitcoin doing what it's doing, showing its true character, which is, once again, it's done the past few weeks. It's an 80% volatility instrument, so you're going to get big moves up and down. And so, I think you'll see people diversify among both, not necessarily for the same reason. The correlation is definitely not 1. Maybe it's positive, 0.6 or so. But I think they will be moving in the same direction ultimately.
All right, Serge, it's been great chatting to you. Thank you so much for joining us.
Thank you.
That was Serge Berger from thesteadytrader.com. I'm Victoria Scholar, and thank you so much for watching IGTV.
For more videos like these, you can follow us on Twitter, Instagram, and subscribe to our YouTube channel.